Merlin Show. My apologies for yesterday. It was an urgent situation came up. As you guys know, with my ex, I've blocked her on everything. I have no intention of speaking to her, and I just hope that she has a great life without me and go on. But we have a common bond, which is our two dogs. So my German Shepherd and her Great Dane are best friends. So I got a bunch of messages from friends yesterday telling me that her dog was dying. And so I went down there to help her with it. We thought we'd have to euthanize him yesterday. Fortunately, he'll get a couple more days, but unfortunately, I'll have to put him down over the next couple days. So I was just trying to help out, where I could. So anyway, my apologies for skipping on the show yesterday, but that was something I just felt I had to do, even though I told myself I never talk to her again. I felt like the right thing to do to help her out. Anyway, back to the matter at hand. Today's show. Yeah, I feel really bad. The puppy, he's so awesome. He's a great boy. It's it's one thing that's really sad about having a dog. We all understand that you're most likely going to outlive your dog. I'm going through that right now. I probably have about a week. I probably have about I'd say a year left before Yoa passes away, and then I'll be a total mess. He'll probably take a whole week off. Yeah. Okay, so let me go into topic for today. I was trying to find something. Obviously, I've been a little bit sidetracked over the last 24 hours, but I got a great question from a viewer that asked about my personal trading endgame. And I thought, okay, I've mentioned some pieces of this before, and maybe I should add some clarity and define it a little more clearly for everybody. Let me read the question for the podcasters out at home. This is from Luis. So Luis, if you're here, thank you for the question. I appreciate it. He says, why do you want to have such a high net worth and not go out and spend it? Let me stop you right there. I have no aspirations. It's not like I'm going through life going, I've got to have the highest net worth possible, right? That's not what I'm thinking. I'm not going through life saying, I've got to have the biggest net worth. If having a large net worth is a result of performing specific set of actions and following my plan, is this sound good today? It should be good. Maybe it's low. It reset yesterday, but I did go and reset it, Lori, but I will check again here just to make sure that it's all good and up on a high volume level for everybody. And for some reason, it's better now. Yep. I don't know why. I didn't turn my computer off. It just resets to half mast on my soundboard. Strange stuff. Thank you, Lori. Now you should be good. So again, I'm not trying to, I know, Crazy Shines his hair day. Hey, Sheena, good to see you. Working out, Yeah, there you go. I haven't quite figured out what to do with the hair, guys. I'm going to trim it here soon, but yeah, it's just wild today. Again, I have no aspirations of having a high net worth. I'm going to explain my thought process along the way. So let me go back to the remainder of this question, but I don't have any aspirations of saying I have a high net worth. That's not what it's about at all. Louis says, I live a life like yours, don't want to spend any money, no need for expensive stuff, but my end goal of having a high net worth is to one day, when I'm gone, my kids can enjoy everything I worked for, and then them not having to work as hard as me. And even then, I ask myself, is it worth it? Why not enjoy my money I'm making in my life, in my lifestyle? What's your end goal? And I think it's a great question. It really is a great question, because when I started trading back in 1990, well, I started in 96, but 98 is when I really went full time and just started to do a lot of day trading. My goal was just to make tons and tons and tons of money and buy yachts and all that stuff. I still have the picture of the yacht I was going to buy. I was reading like some boating magazine as I was coming down to take my class in Irvine, California on June 1st of 1998. And those dreams and aspirations change over time. I think as you get older, you realize what's really important to you. So Luis, let me explain what I'm thinking. So here is me, according to AI. All right, that's Trader Merlin. And all of us, regardless of whether you're trading or working, you should have multiple streams of income for yourself, right? Your goal really should be to build as many streams of income as possible. So obviously I have one, which is work income, and that's my base, my foundation, which is my Work for Trading Academy. I also have my own corporation in which I license work out to other entities and other individuals. So I am basically I have 3 other companies I'm working for, building various things, content, maybe writing newsletters, but that's supplemental income that I also have. I also have properties, and you have rental income coming in from those properties, which I think everybody should have some sort of rental income. Now, you may have royalties from acting jobs or from patent or something like that, but our goal is to have as many streams of money coming in, because should any one of these channels disappear, let's say all of a sudden I'm unemployed, well, I still have the business income and my rental income. Or let's say I get cut off from all my other side gigs, and well, now I just have my primary work and my rental income. So that's how I think we should all set up our lives, is make sure we have multiple streams of income. Now, I didn't mean to do that. My graphic was off. Hold on. I was really thought I had this nice and prepped for you guys today, but I will make sure we'll fix this one right now. The fourth component here is going to be my trading income. Right, and I spend most of my time in the trading world, trying to grow that account. And these bubbles are not proportional, right? There's no real rhyme or reason to the size of the bubbles. Just ultimately, these are kind of the 4 income streams that I personally have for myself. And you may have some different ones, right? For me, I look at the work income, the business income, and the rental income all go into a checking account, right? It's all goes in the same spot. I do have a business checking account, so I can partition that income, and I actually leave that alone as well. So even though that business income goes into an account, I'm not touching it. I let that grow. It's not making high interest or anything, but I let that go. It's kind of an emergency fallback fund. So really what I'm living off of is work income and rental income. Now, part of the reason I have those two, I'm using just those two, work income and rental income, is because that allows me to have the lifestyle that I want. I am not a type of person who wants to have a brand new BMW or, Dolce & Gabbana handbags and diamond jewelry, and that's not me at all. Honestly, I'd rather go to the thrift store to buy my clothes. Well, not really my clothes, but I love going to the thrift stores. You get me at TJ Maxx or Ross, Old Navy. Those are my types of clothing stores, unless I go to Thailand and get something custom made. So I really don't want to. I don't see the point of having a shirt that I spend $500 on because it says Fendi, or a shirt that I can spend $10 on that looks cool on me, or I like it. To me, it's mindset. It's the perspective of how we choose to live our lives. Now, it's interesting being back in the dating scene, because some girls that I've looked at and thought, oh, they're really cute and I'd like to date them, they're dressed in nothing but name brand clothing. They're driving Mercedes-Benzes. They got tons of jewelry on. I'm not interested. I want nothing to do with that type of person, because that would clash with my lifestyle. They're just gold diggers that want to look really impressive with all their stuff. I'm more concerned about, or I'm more focused on, building a safety net around me and making sure that no matter what life throws at me, no matter what happens, knock on wood, I get put in a wheelchair or something and I'm now paraplegic, I have the finances to support myself through the rest of my life. So that's part of it. For me, it's really about trying to be, does the clothes make the man or the man make the clothes? Good question, TD. And I think in this day and age, especially where I live, I probably should step up my clothing game, because, the ladies down here are very particular, but I don't want someone to find an interest in me or think that they want to be with me because of the clothes I wear. It's the character of the content of my character and who I am as a person, my mind, my creativity, my drive, my ambition. That's what I want a girl to fall in love with, right? To me, the man makes the clothes. So, sounds like a good dating plan. Maybe a haircut. Yeah, we're definitely going to get a haircut, Big. That's why I wear a lot of hats. But going back to this one, and I should actually take out the business income. So I do have the business income coming in, but that account I'm not touching. And again, I'm writing articles for other people. I'm teaching for other people. I'm doing all kinds of other things. I'm going to take that arrow out, because right now I would argue that my lifestyle is supported simply from my work income and my rental income. And that includes, paying my mortgages and all that stuff. I manage to do everything very frugally. So what's happening is, yes, Luis, my net worth is growing because the business income continues to grow, but also this trading income, especially when I'm getting really great rates of return per year, that's going to grow much more quickly. Now, what are my end game goals? Well, I don't know. It took me a second to think about this one. And if I look at my end game, number one is my main trading plan rule is I want to beat the S&P 500 every year. I don't do that. I mean, there's sometimes where I completely annihilate the S&P and I'll get, 3, 4x what the S&P did. And there's other times where I'll miss it slightly, and that's honestly kind of frustrating. But over the long haul, I've beaten the S&P. So that's my main goal. Number 2 is I want to live a life without touching trading proceeds. I don't need to, right? If I look at what I have right now, there's no need for me to take in a bunch of extra money. What for? I'm not going to go out and, I was going to say I'm not going to go out and buy a new truck, but I actually am thinking about going and buying a new truck just to get rid of the old one, which reminds me of her. But I might buy a new Toyota Tundra, different color, but 2.9% financing right now, that's cheap, easy money. I'm not the type that goes and does massive, lavish, spend a ton of money trips. Even when I go to like Thailand or something, I'm living rather frugally, right? I'm trying to make the best bang for my buck, and I'm hoping maybe I can go to Thailand here in the next couple months. So I'm trying to not touch that money. And here's where I think the big difference is, Luis. Luis has a family, Luis has kids. As you guys know, one of the biggest reasons why I was so upset about losing my ex was I thought that she would be the mother of my children. That's really where I was going with that, and unfortunately, that didn't happen. So my goal was to develop financial security, not just for myself, but for my family. So not only do I want to put myself in a position that if something should happen to me, I'm taken care of financially for the rest of my life. So right now I'm single. If something were to happen, I lose my job, I could live the rest of my life off my trading proceeds and the investments and real estate and all the stuff I have. I could retire today, but I choose not to because I just would think I would go crazy. I'm driven. I would like to do more things. But this, I think, is the big piece here on why I've never touched my trading stuff. I wanted to build a nest egg to support a potential family. I wanted to get to that point where I was literally the stay-home dad. So I wanted to get to that. That was the plan anyway. And I even had this discussion with her. My plan was to be the stay-home dad, and I was going to raise those kids, teach them how to be a good young man or young woman and go out in the world and do something great, as opposed to, I think, many kids today have lack of good parenting, and they're just little rugrats that, anyway, we can go down that discussion. So, that was what I think the main purpose was financial stability for myself, and also knowing that I have enough saved that my kids won't ever have to worry about college. I would like my partner to work, but depends on our age and where we're at. But ultimately, that's why, Luis, it's not about, I'm not trying to accumulate net worth. It's not a number for me where I say I got to get 8, 10, 15, 20 million. It's simply, I want to make sure I am financially secure in any situation, right? If anything comes my way, I want to be protected. And that ultimately is my end game. And I've noticed for myself that I can live a great life, a life that I'm very happy with, without touching either of those other two main income streams. Now, for each of you, I challenge you to look at your situation, right? What are all your income streams? Are you using all of them? If you can cut off those income streams and just let those build themselves and compound. For example, the business income one, that's going through a regular savings account that's going to get low yield. I'll get about 3% in growth in that account. But the trading income, that's compounding and getting bigger and bigger and bigger. I could put, in all reality, I could actually cut off the rental income as well and let that compound. But I just have that going into the same basic work account that I have, so it all goes in this work income account. But what situation are you in? Do you have rental income? Do you have only one source of income? If you do have one source of income, I would challenge you to build another. Find some other way to have an income stream, because if that one stream gets cut off, you're screwed, right? I was talking to a friend today who has friends that are in government. And on this government shutdown, these government employees are now tapping into their savings. She had two specific friends that said they're now tapping into their savings accounts to pay their day-to-day bills because they just don't have any money coming in. I said, well, they'll get back pay. She's like, yeah, but when? What are we, 36 days? This is officially the longest government shutdown in history. Conveniently, the first one was under Trump administration. Actually, the top two are now under Trump. So in that situation, those individuals, yes, they can tap into their savings, but how much potential damage could happen to them if this government shutdown goes on, let's say 60 days or 90 days or 120 days or heaven forbid the rest, a year, right? We always have to play that contingency thing. And to me, if you have one bubble here, one income stream, you're in trouble. Because if that one income stream gets cut off for whatever reason, you might be the best employee in the world, Well, your boss says, well, we're going to AI and your job's done. And now you're like, unemployment's not going to pay my bills, right? So, Luis, it's a great question. I don't know if I answered it fully. I answered it fairly openly, but, for me, I just want to live within my means. I'm not a lavish, flashy, I did buy the new iPhone 17 just because my other one was this archaic dinosaur of a phone. But that's my end game. My end game is I will trade until the day I die. I'm going to be a senile old man. Hopefully, I won't be a single old man. I would love to have a partner to share my life with, and good Lord willing, I'll find someone who wants to start a family with me, even though I'm an old dog. I would love to have kids. I would love to go through all that, and that is why I'm not touching this money. I'm letting that money build up and build up and build up. So if that eventuality does come my way, maybe I won't make the same mistakes I made with my previous relationship, and I will have some kids, I will have a family, and this money will go and support them, everybody, through their ups, downs, and good and bad. So there you go. I hope that helped you, Luis, if you're here today. Oh, you are there. Here he is. There's Luis. Big Ed says it's a good idea to have at least 6 months of cash or cash equivalents on hand to handle emergencies. Absolutely. And that's, every financial expert will tell you that, right? You should have, what do they say, 3 to 6 months worth. Have 6, But even 6 months, if we look at the forecast, the hypothesis of AI and its impact on jobs, there's a lot of unknowns there. Do we get to the point where there's just mass job displacement? If there is, I would question, Big Eb, is 6 months even enough, right? Because at 6 months, you may still be struggling to look for a job because there just isn't enough job creation. Again, I don't know what that future looks like, but in my situation, if that 6 months turned into a year or 2 years or 5 years or 10 years, now I'm starting to pull out of these other accounts, right? I pull out the business income account, I'll pull out of my trading income account and slowly feed out of those to pay for shortcomings that I may have with my income streams. But set up as many as you can. Got some side gigs, great. Got some rental property, awesome. So you create a cool idea and you're selling royalty checks. I remember when I was younger, one of my friends, Todd, I cannot remember, or Jeff, his name was Jeff. He went to the competing high school. My cousin was good friends with him. His dad created this, it's like a Tupperware ring, but it was just a ring. It didn't have you put saran wrap over your dish and you put the ring on top. And he sold the royalties for this thing, and he just gets millions of dollars a year from that stupid little idea. It's like, man, create more of those ideas, right? He was an inventor, and he just got all these different royalty checks coming in. Anyway, there we go. Totally off topic, totally random, but I did make the comment the other day that I don't touch my trading accounts, and that's why. I'd rather let them grow, let them compound, and it allows me to experiment a little bit as well, right? I can try different strategies. I can try different things out. I just move money into a different account. I never want my account's over $500,000. That's another important thing because of the SIPC insurance. So you want to make sure you have that coverage as well. So I spread them around at different brokerage firms. I got them all over the place. Just keep track of where all your money's at and continue to grow that money going forward. So that would be my end game. I think I had it right there. Nope. There is my end game, Luis. Great question. I'm glad you asked that one. This was very unique and specific to me. I would encourage all of you to step back and think about what's really important and what's your end game, right? Plan things out, map it out. I mean, I would put this in the category of financial planning. I'm basically looking forward at my accounts or looking at my future and saying, okay, if I have all these different income streams, the work income one is fine. I don't feel threatened there at all. My business income is actually really good. I'm getting more and more people just demanding my services, which is kind of taxing a little bit. But now I'm to the point where I can pick and choose business opportunities and go for the highest paying ones. Rental income, that's something that I may actually buy some other properties here. I'm waiting for a housing crash, honestly, before I buy some more, and then I'll rent those out. And then, the trading income one, I just leave that alone. Just leave it, let it compound, let it grow. Especially, when you have developed a skill set that I feel like I have developed over the years, whether that's, trading futures or equities or options. The 1% strategy has been a great thing as well. Over a time, that compound is significant increases in net worth. Own nothing but contro. I'm not sure what that means. Let's see. My accounts are compounding more than what I spend out of, and that's important too, right? If you're taking money out of those accounts, obviously you want them to keep growing. And this, Lori, this is one of the things I tell all my friends. Like, if you ever win that lottery, you let me know. I'll manage it for you. And even though you take, $1 million a month out of the account, we can still have that account growing at a greater clip, even though you're taking money out. But that has to be done strategically through a plan and an approach, most likely using options or wheel strategy or something like that. Own nothing but control everything. Yep. I think owning things is important, VB. I think there's a good concept of ownership, especially when it looks at real estate. That's an asset class that over time will historically go higher and higher and higher. Now, there may be unfortunate circumstances which cause a specific area to go down in value, but for the most part, people need a place to live. They're always going to be paying for shelter and overhead things. All right. That was 21 minutes of completely tangential, not really trading related, although it was what do we do with our trading accounts and kind of high level, bigger picture. So again, Luis, thank you for that one. Hope you guys appreciated that. And I know we've got some elderly participants here who have probably thought about this many, 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 many years ago, and some younger people in the audience who probably haven't thought about this at all. All right, let's go out to our markets and see what we got cooking for today. Interesting earnings day. You had a few companies. You had Apple, McDonald's, Qualcomm, ARM, and Hood report earnings today. We'll take a peek at those. But let's run through our top 8 here just for fun. And again, if you have questions on anything I just brought up, let me know. Type it in the chat there, and we will rock and roll from there. All right, one nice sip of water to get me rolling. And let's dive into crude oil. Financial education is always good. I agree. I think the financial illiteracy problem in America, and maybe even globally, is orchestrated. And I know you might, Merlin, you're just a conspiracy guy, but I feel like when we grow up, as you're coming up through adolescence and you become a teenager and then you become a young adult and then you become, middle age and then all of a sudden you are, old, I believe that whole process is rigged. I believe that, for the most part, it's designed to keep you like a mushroom, right? They keep you in the dark and feed you a bunch of crap. And the belief system is that you can't do this on your own. You can't do it on your own. You got to hire a financial advisor. Got to have a CFP or CFP help you with it, and they'll be the ones to take care of it. The reality is, with just a little bit of focus, education, understanding about money, compounding interest, income streams, debt, liabilities, income, all those things. Sorry, Jim. There are some great financial advisors out there. There are some great financial planners, and that definitely can help you. But my point is, I think that the average person with the right training and understanding can do it without the fees. So sorry, Jim. Sorry. Remember, I worked for a financial planning firm, and that experience left a relatively sour taste in my mouth about how that specific firm was fleecing the customers to the tune of about 5%. And putting them in investments that weren't in their best interest. That was, you got to shop around. If you're going to have a financial advisor, make sure you shop around and find someone that's trustworthy, know the right questions to ask, negotiate your fees, and make sure that you get out of it what you want. But I think that we can all do pretty darn well if we just had good understanding of all those pieces. Let's go to crude oil. So crude oil, continuing that downtrend. Remember, we popped up to that 62 line, which we'd drawn on there about a week and a half ago. Rallied up to it, had a little shooting star, and then had the sell-off. And then as of Monday, I was like, are we going to challenge this yellow box again? And now it's doing what it should have done, which is sell-off, right? So you hit an overhead supply level. Now the question is, does crude oil come back and challenge that 57 zone? Maybe I'll put a demand zone on here to make it a little bit easier for everyone to see. Let's put it right there. Bam to the bam. And that's not on snap mode. So let me get that out of there. I like snap. Snap mode is the best. And there you go. So our zone, from a demand perspective, is sitting right at 57.32 down to, let's call it, $56. All right, so you got $1.32 zone right there, and it looks like that trend is going to push lower. Right, we've been making lower lows and lower highs for really since June. Don't see why that should change at this point. Right, I think we're going to continue to drift lower and lower. So that looks great from a short perspective, especially for those of you who have isn't having a financial advisor just being lazy? No, I don't know if it's lazy. Again, going back to Luis's question from early on, maybe You have so much going on in your life, you can't take that time. Totally respect that, right? Many of you are really busy in your personal lives. Maybe you're running your own business and you're like, you know what, just take care of it. And you're going to pay that extra percentage to have someone take care of it for you. I have no problem with that. But if you're just sitting around and you have a ton of free time, you're like, I'm just watching TV all the time, or, I golf 5 hours a day. Well, take an hour of that and even less than that. Take 10 minutes a day and start looking at educating yourself on how to manage your own portfolio. You'll do better. Technician JD says, I don't have a life. I work and I'm in the markets. All right, let's grow that net worth, JD. Let's grow that net worth. Been shorting all year. Cha-ching. Good for you, Larry. All year, huh? Not bad. It's funny because when you've been shorting all year, this is where I think risk management becomes key. There's a spot in here where you should have really said, I'm out, if you were shorting all year. And that is right around $65, right? Because if you go from the beginning of the year, you were underwater for a while. If you were in fact shorting from the January 1st, right? Or 2nd. This thing rallied up from $73 up to over 80. So you were underwater for a bit. And then all of a sudden it started to fall apart. Right here, it started to make a new high right there at $65. So this should have been a stop loss for you once you started to make a new high at $65. So you should have been out. Okay, there you go. And now, that trend is just really clear. The question I have, which keeps revolving, is what is the extraction cost for oil? Right? How low do we think this can go? Obviously, it's not going to get to negative $40 per barrel, but does it get to 50? Does it get to 40? Does it get that low? I don't think we'll get to 40, but the trend is your friend till the bend at the end right now, and it's making lower highs, lower lows. It feels like we're going to go sub 55 probably within the next couple months. So we will see. We'll see how that one goes. Right now, the shorts have it for crude oil. Now, the dollar index, fairly unchanged on the day. This one's also very interesting. What level we have mapped out there? We had 100 and a quarter. And all of a sudden, it broke above 100 and a quarter. It stopped below it. This, to me, is a reversal pattern. So we will map out this one as well, which is a zone on the dollar index that goes from 100.06 to 100.25. So you basically got a 19-cent range there. If tomorrow we open up on that dollar index and this thing starts breaking down below that 100 mark, I think you got a great shorting opportunity. It's had a pretty significant rally over the past 6 days. Really 1, 2, 3, 4, 5, 6 green candles, and some of those are just giant green candles. All in all, pretty darn good day. Actually, there's a red candle today, my bad. But if we get a breakdown below, expect the S&P, NASDAQ, Russell to rally if there's a big sell-off in that dollar index. So this is kind of that leading indicator for you. If this sells off, expect those equity indexes to rock. Now, that's the only negative stuff for the day. S&P 500, we're up 0.35, so not a big jump. And technically, it's still following the overall trend, which is higher highs, higher lows, so no big deal here. NASDAQ, same picture. I drew this area out a while back, which is meant to be supply, but this is what I love, where supply becomes demand again. The tail on today came all the way down into that zone and then rallied out of it. Kind of convenient. Now, does that mean we're going to challenge all-time highs? It would appear so, right? We've got kind of dominoes lining up. You got the dollar index sitting at supply, about to sell off. You got NASDAQ just bounced off demand and potentially going to rally higher. So that could mean that Thursday and Friday's session are pretty bullish opportunities for us going forward, at least for the next few days. Resistance becomes support. Yep, absolutely. Gold not doing much, right? Gold is actually, I'm going to have to delete this yellow box. I think it's losing its significance, right? It just keeps traversing back and forth. What we're getting here is consolidation. It's not a good sign for gold. What we should see, if in fact this is on a great uptrend, which it looks like it is we should see it start to rally back up and make some new highs. But remember, if the equity markets surge, the dollar has been surging, which is also a factor in the price of gold dropping. Remember, the more expensive the dollar gets, the less gold foreigners can buy with their currency. So that is an inverse relationship. But keep your eye on gold here. It's not looking very good. If, in fact, we do see the dollar sell off tomorrow, you could see finally a nice move up in gold. We'll see if I'm right tomorrow. Russell was your big leader from the index perspective, up 1.47%, but it also just following this nice little uptrend. So nothing big here. It still feels like the uptrend is intact. We did not break any pivot or swing lows on the NASDAQ, the S&P, or the Russell. And if you really want, because you want to chap my hide, we can go look at the Dow. Even the Dow has not made a new swing low. So, hey, stay long. This market is still very bullish. Now, here's where the story changes a little bit. You have that little zone I'd drawn out. I thought we'd see more of a sell-off from that 4.124 level, which was a supply zone, origin of this big move back here on October 10th. It sold off for one day, and then followed through today, and then had a huge rally today. I mean, 1.91%, so it was almost 8 basis points. Not colossal, but still, that's a pretty big jump up. And this, Bill Addis has been calling for the 10-year yield to increase. I've been in the camp of I'm expecting it to continue down because the trend is your friend until the bend at the end. We are coming up to a point of inflection here on that 10-year, and that's 4.187%, or roughly 4.187%. You can see there's some highs here that go back to September 25th as well as September 26th, right? Let's put a line right across those highs and snap mode that bad boy. That's 4.199. So call it 4.2. If we break above 4.2%, we're now breaking a swing high, which means that technically that downtrend is going to be broken. I know you see the big line, the dotted line there that's coming across the top, sloping down from the top, but that trend is going to have a new high put in, which would break the technical definition of a downtrend. Is that a deal breaker? No, you can see we've done that several times here in the past, but it's your first indication that this thing is getting some serious strength to the upside for that 10-year. The higher that goes, the bigger impact it can have on the equity markets to the downside. So we've got all kinds of conflicting signals here, right? You've got the dollar looking like it's going to reverse, which could be bullish. You've got the 10-year, which is looking really strong and about to break through overhead supply. If that does happen, that's bearish. So we'll have to pick them one by one over the next couple days to see how this all pans out. Benara says, Merlin, with Michael Burry long puts on NVIDIA and Palantir, will this have an effect on those stocks or tech markets as a whole? Well, first off, I'm kind of sick of the Michael Burry name. The guy's been wrong a lot. I mean, a lot. And I kind of feel like he wishes he could just crawl back into the shadows. When you have someone that has a name with the prominence of Michael Burry or, a Warren Buffett, you name it, there's a bunch of, an Ackman. These guys make it very public what they're doing because they want to show everyone, here's what I'm doing, and create that fear moment. Yeah, Steve says he's wrong more than he's right. I don't know if that's true, but it could very well be. So if you've got Michael Burry saying, I'm buying puts on NVIDIA, I'm buying puts on Palantir, that may cause more people to go, oh, well, the smart guy, because they believe he's this genius, he is going to be shorting the markets. I'm going to join that as well. And you do have people who follow these influencers. If you go to, there's a website called Guru Focus. See if I can bring it up here. I'm going to do it off camera just so I don't get any ads. Guru Focus was a cool one. It used to be really, everything was free. Now you got to pay get a free trial. Bummer. They changed it. So you go to here, Gurus. You can go to the latest Guru picks. And on the side, you can see there's Michael Burry. So you can see him. You can also see Warren Buffett on there, Bernard Horn. You've got all kinds of big prominent people here. But if you look at Michael Burry, typically they'll show you his portfolio, but notice they're usually outdated. This was as of, it's going to not let me access it. This is as of September 30th. So you're already a full month behind on whatever he's doing right now. So he's got puts on Palantir, NVIDIA, Pfizer, and calls on Pfizer and calls on Halliburton. To the equivalent of 500,000. Wow, man, that's a pretty significant. He's got a 900 million notional value short position on Palantir. Man, that's a gutsy call. And I'm in his camp. I do believe that you're going to see more downside movement here. I think more every time I think about it, I feel like this is just this crazy, weird little Ponzi scheme to boost prices of all these tech stocks. Right? I mean, we talked about this on Monday. Like, how can OpenAI commit to $1.4 trillion worth of investment when they don't have the money? I mean, that's like me going out and going to all my neighbors in the neighborhood and saying, hey, I'll give you $2 million for your home. And they're like, oh, well, it's only worth, 1.5. I don't care. I'll give you $2 million, but I'll give it to you next year. And I'm hoping that I have that money next year. Because if not, it's all going to implode. It just seems wild to me. So I think Michael Burry is probably right. I don't know if I would short NVIDIA long term, maybe short term. So if you look at NVIDIA, You're getting that nice little pullback here, but it's still on an uptrend, right? I think some of this should definitely come back down. I think some of it's gotten way too lofty. I'm still holding my shorts on Amazon, which started off good. We had a little bit of a green day today, but I do think you'll start to see it fill this gap and maybe get down to that 225. So yeah, still holding the Amazon. I'm still holding FI as well. Remember, I have the $62 strikes that are expiring this Friday. That was a great rate of return. We'll see how that one all pans out. But buying with time on our side. Absolutely. Try to buy with time on our side. And then the big one, the big deal today, at least for now, you have a bullish Harami formation on Bitcoin. The good news is, and this is very good news, okay, we did not close below 100,000. Not on the futures, not on the spot market. Spot market tiptoed below it. So this is the spot market. Let me get rid of that 4-year cycle box. We closed below it, we tiptoed below it 2 days in a row, but we did not close below it. That's critical. For me, a close below it triggers more and more and more potential selling. So great that we're holding above it, but I don't think we're out of the woods yet, okay? Until we get up to like 117, which is a long ways away, right? You're talking about a 17% increase in current position, 16%. I still think that there's more downside pressure here. Just because the 4-year cycle and the pieces I outlined the other day, I think that does create some potential problems, right? You've got, the miner exodus. You've got everybody focusing on AI and converting over to AI and all these GPUs now being used for that. You've got hacks going on. It's just, I feel like there's a lack of confidence in crypto right now. So I do expect this, I hate to say it, I do expect it to go lower. I dumped my IBIT in my other account too, which is unfortunate. I kind of wanted to keep that one, but I dumped it just because I felt like we're going to be going down a bit more here. Louis says, didn't Microsoft come out and say AI is not making any money? I don't think they said it's not making any money, just not as much as they anticipated. But that's fine. They got to find their niche. They'll find their groove. And just like the .com era, there were companies that said, hey, we're going to make so much money off of the .com thing, and they didn't make it. Ultimately, standing the test of time, some of those companies did figure it out and survived and did very well, and many others just fizzled out. In some of the presentations I've done for Trading Academy, I reflect on my past and say one of the biggest mistakes that I made was in 1998, I was so focused on day trading and doing high-speed trading that I didn't focus on long-term investment opportunities. That the fundamental shift of information exchange was going to happen because of the internet. Like, I knew it in my head, but I was so focused on scalping and making day trades because that's what I was doing. I should have taken some, allocated it to different positions that I thought might be the big companies, and just held those for a decade. That's what I'm doing with crypto now, right? I'm not making that same mistake twice. And it's already paying off dividends in a huge way for me, but I still have years to go. I still have a few more years to go. So we don't know who will be the victor in the crypto space from a blockchain perspective or project perspective, which is why I always encourage people to build a portfolio. TD says, wouldn't NVIDIA or Palantir more likely go sideways than lower? No, not necessarily. Maybe you got buyers and sellers, right? You've got a lot of people. If you just take Palantir, for example. Look at the rate of return on Palantir from the beginning of 2024. We'll just go back to 2024. So we're going just almost 2 years. Your rate of return is 1,000%. 1,000%. I'm sure there's some people in here who owned this thing back in the teens. And you're like, yeah, you know what? I should take some profit off the table. So what do you do? You set a level and you say, all right, if it gets below a certain point, I'm just going to lock in profits. And that may be triggering now. Right? We might see people start to sell off and lock in profits here. Again, I'm not saying that Palantir is a bad company. I'm not saying that Palantir is over and done. I'm saying that there is a high probability that these things will revert back to a mean and kind of go back to a moving average or just have a retracement, right? You look at this. I just threw the moving average on here real quick. That peak that we had on Monday was the rubber band example I use over and over and over again. It got so extended, and all of a sudden what happened? It snapped back, and now we're coming back down towards that moving average. Now, NVIDIA is a little bit different. It also got very extended on Monday. Nice little double top, and now it's coming back. It would not surprise me to see NVIDIA drop back down to the 185 level within the next couple of days. Not that big of a deal. That's just a simple retracement. Talk about my hair, my wild hair. This is a no product, just wild do, man. It's weird. Usually my hair is really curly, but I guess I'm getting older. I don't know. I'm going the silver fox route. Okay, I'm going the silver fox route. I got called away at 50. Ouch. Oh, I'll leave that one alone. I got called away too on my call, Steven. You know what? Remember what we always say? You can't go broke taking a profit. I can be resentful. That I didn't make more money, but some of these are just long in the tooth. I mean, Amazon. Look at Amazon's extension. That's why I bought puts on Amazon. I bought puts on Amazon because it was so far extended above its moving average. It has a giant shooting star. Look, I love Amazon. Love it. Right? But I still think that this thing has some downside movement. It's just going to come back to a normal level. And you got a lot of these companies have been doing that. I mean, Microsoft is still not recovered from its earnings announcement. That's not a good sign. Google still looking fantastic. And then Tesla was up 4% today. I'd say it, Tesla's one of the better looking ones. At least it's not showing parabolic moves. It's kind of slowly growing and ticking and going up and up and up. There we go. Microsoft's getting close to 492. If it breaks that, it may get ugly. Well, let's see. MSFT, 492. Yep, I agree with you. And I'll put a line across the bottom there, and you're going to this low from right there, 492.37. Right? If you get a close below 492, I agree with you. I think that there's going to be much more downside movement for Microsoft. Remember, most of this whole industry, most of the whole AI players are rocking all-time highs. Now, Microsoft is near its all-time highs, but it hasn't done anything. Look at the moving average. That 50-period moving average is almost totally horizontal. Not good. 506 in the after-hours session right now, 506.64. So you've got about, what's that, 8 plus 6 is 14. You got $14. That's about another it's about a 2.6% slide. Gets us down to 492 on Microsoft. And that might be a great shorting opportunity if we get down below it, right? No. A lot of things moving out there today. I'll real briefly just go into some of the companies that reported earnings today. AppLovin. This is one I was wanting to sell puts on in their bad earnings announcement, but I decided not to. Notice it came right back down its moving average and still trending to the upside. Now, on their earnings, they jumped. They had good earnings. They beat earnings announcements, and they were up 6% in the after-hour session, but most people here don't trade AppLovin. I'll stick with the positive stuff. You had Qualcomm. QCOM. Qualcomm had a good day, and earnings were pretty decent. At least they started off decent. They beat earnings, and they had good expectations. Let me show you the 5-minute here. This is why I just don't trade earnings. It started off okay. Actually, no, it started off bad the whole time. I thought this was up in the after-hour session. I could have sworn Qualcomm was up. It's down 2.12% right now in the after-hour session, but that's after a very bullish day of 3.92. So net, we are still up on the day, technically. Let's see, what else do we have reporting earnings? Oh, ARM, right? Got a little programmable chips. They beat earnings as well, and we're up in the after-hour session 2.69%. Robinhood, I didn't see what they said, but Robinhood reported earnings. They beat earnings and are down 2.78% in the after-hour session. And I know Margaret probably still holding on to her Robinhood. I think you're fine to hold on to it, but I might just scale out of a little. Just sell off some and lock in that profit, right? Johnny says, I don't see Amazon leaving anytime soon. Amazon's not going anywhere. Amazon is here to stay for sure, but do we see it come back down to something like 225? Sure, that's a potential, and that's why I have a short position on Amazon, just because this gap was overdone on pump-up news with OpenAI. This is, again, $38 billion deal with OpenAI, and OpenAI got no money. Where are they coming from? Okay. All right, back to... we were on Hood. Oh, and the other one, McDonald's, Mickey D's. I saw an article today that said McDonald's is struggling to bring in its low-income customers. Like that, isn't this where you go if you're low income? I mean, where else are you going to go? What's cheaper than McDonald's? Anyway, they reported earnings. They actually missed earnings, and they were down in the after-hour session, but now they're up 0.05, so just barely to the upside. But they missed their earnings announcement. But look, if anybody tells you that you should be buying McDonald's, what are you going to tell them? Oh, hey, you should buy McDonald's. It's a great company. There's so many franchises. It's all about the land they own. Yeah, oh, God, the chicken nuggets are the best. Look at the chart. You ain't going to make anything on McDonald's. It's just sideways and boring, right? You need to go something with a trend as your friend to the bend at the end. Steven says an $11 Big Mac is not for low income. Ha! This is where you need to know the secret menu. And this is what's frustrating me, guys, is I'm on such a health kick, I can't take advantage of this. So those of you who don't really care about your health, you can help me live vicariously through you. If you go to McDonald's, you can ask them for their $5 value meal, which gives you a chicken sandwich, French fries, a drink, and I think there's something else that comes with it for $5. You're not going to beat that. You're not going to beat it. Unfortunately, you're going to get some serious calories and fat buildup. By the way, I do every Wednesday. I told you, I'm keeping you guys in the loop. I haven't posted the pictures of it all yet. I'm kind of wanting to just kind of keep you guys on the journey as like just the life of Merlin here. But I did my DEXA, my in-body scan today, and we've gone from roughly 18% body fat. Today we're 12.1. My goal by the end of the year, I want to hit 9.99. I want to get sub 10, and then I'll go to the bulk up phase. But eat healthier and go to the gym. Absolutely, Larry. I'm a big advocate for that. Unfortunately, I didn't do a bunch of before and after pictures, which I should have done. I also don't take pictures of myself without clothes on, so that's not going to show much difference there. Big F's is shit food. Well, it is, but man, I'll tell you what. There's that time where you feel like when you have a good chicken nugget, there's those guilty pleasure days where you just dip that in the hot mustard sauce, and it's so delicious. I know it's not even chicken. I don't even know what it is, but it's good. Oh, thank you, Sheena. We're working on it. We're getting there. I got a long way to go to get the guns I want, but appreciate that. Lean muscle's been increasing significantly. Chick-fil-A, but they're closed on Sundays. Every time I want Chick-fil-A, it's a Sunday. All right, what else we got for this week? Obviously, government shutdown. 36 days, longest ever. Thank you, President Trump, for that one. If you go here to the week, though, obviously I missed us on our Tuesday session. You do have a rate announcement that came out Monday, which I didn't get a chance to talk about. 3.6% for the Aussies. That was one of the changes. There's another rate announcement coming up on British pound. Yeah, that's going to be tomorrow. So you can see here you've got the British pound. They're expected to stay at 4%, so no big deal. Expectations are going to stay the same. But Thursday for us, for the U.S., we have the Challenger job cuts. Now, let me scroll back up here to today's ADP non-farm employment change, which is really the only jobs data we can get because everything else is government related, right? Well, we went from negative 29, meaning job contraction, that's not good, to an expectation of 32,000 jobs created. We came out at 42. So this is actually pretty decent from a job creation perspective. And as soon as I get past this giant fall here during COVID, it still doesn't paint a great picture. Right? Even though we're a positive number, I think we really need to keep an eye on this because we're declining. Every month, the expectations get lower and lower and lower and lower. The trend is very clear that we are seeing less job creation. And again, this is why Jerome Powell and the Fed have cut rates 2 times over the past few months. And we may see one on December 10th as Jerome Powell changes as well. No change on the British GBP? Not yet, right? So that Thursday announcement, let me bring it back up here. If you're looking for that Thursday announcement, that's going to be at 7 a.m. tomorrow morning. We get that British pound announcement, and I'll show you what the British pound looks like. Let's bring up my Forex up here. Bam, bam. Get the index out of the way. GBP USD. So there's your British pound. This thing has been tanking. And the more that they cut their rates, the more this should fall. So if they come out and stay at 4%, this should actually stabilize. But right now, the trend is down for the British pound. It's been dropping fairly consistently for the past month and a half, 2 months. So there we go. 42K is better, but still bad. Yep, totally agree with you, Steven. Absolutely. Yeah, when you look at the historical norms there for ADP non-farm employment, this is not a good chart. I mean, you hear me talk about the trend is your friend or the bend at the end. It's so clear, and it really started to clearly drop, I would argue, back in December of last year. Right? We had our October high. That October high, excuse me, as I'm scrolling on this picture. There we go. That October high was 233,000. And then it's just been dropping ever since. And it actually went negative a couple times. But just the little dashes here are the expectations. And that's what's concerning, is the market really is anticipating less and less job creation. Right now, my big concern is what percentage of that job creation or job destruction can we attribute to AI? Because if we can start to plan a trend on AI's impact on job creation or destruction, then we can start to calculate what that might look like over the next 3 months, 6 months, year. And I think that's when it starts to, the doo-doo really starts to hit the fan. Could be pretty bad. All right, that's your economic calendar for mañana. There's really not much else there. You got a ton of FOMC members speaking tomorrow, so that could create market volatility. And if you are looking for that, just keep in mind that's going to be like really starting at 11 a.m., noon, 2 p.m., 3 p.m. They're talking all day. So you got most of the FOMC members will be speaking. And then you go to the earnings calendar for mañana. We have a couple big names. 652 companies reporting earnings tomorrow. From a market cap perspective, your big names out there are going to be AstraZeneca, ConocoPhillips. You've got Airbnb, Petróleo Brasileiro, Canadian Natural Resources, and then it just starts to drip Monster Beverage, and then we get down to some smaller names. But that's your earnings calendar for tomorrow. Did you see weakness in the housing market in SoCal? Oh, Sheena, the real estate agent, right? The tape is your friend. It tells you when to find the right and wrong things. Yep, absolutely. So, what time am I at? Crikey, done. And I got a 3 o'clock meeting. Perfect timing. Maybe I'll even brush my hair for that meeting. That'll do it for me, everybody. Sorry about yesterday's show. And I'm wishing her the best. I know that it's going to be a very, very difficult time for her. I have a feeling she's probably going to put her dog down tomorrow. So, it could be a very solemn day for her. But sending out positive thoughts for her and hope that everything goes well. If you guys have anything you want me to discuss on tomorrow's show, email me, tradermerlin@gmail.com. It's on your screen. Again, Luis, thank you so much for the question. I do appreciate it. You basically created the whole topic for today's show, or at least the opening topic, which I'm hoping that some of you found interesting and maybe help you define a little bit about what you want to do, what your goals, what your objectives are, and kind of how you feel your end game should be. What are you looking for? What's your goals and objectives? If you don't know, think about it. Write them down to get things on paper and build out your strategy for the long term. That, my friends, is your show for today. Thank you guys so much. I will see you tomorrow. Take care.